So, 2018 was probably not the year that we expected, but at the same time, it was probably the year that we needed, where 2017's dizzying price highs embedded HODL into the public consciousness. 2018 was the year that buildle became a trend in the crypto industry. But I think it goes deeper than that. I think a lot of things happened this year that were glossed over or not given proper attention because everyone was obsessed with the price and what the price was doing. So with that said, I think there are some macro developments going on that will really start to manifest themselves in 2019. 2019 is going to define cryptocurrency in a way different than how 2018 and 2017 did. Essentially, we're in a new market, crypto has made some evolutions, and I'm extremely excited for the striations of possibility that lay before us. So to capitalize on this, let's talk about some of these trends going into 2019 and what they mean for us. Now, it's important that we also look behind us and appreciate what this past year meant. And I'll do a separate video on that. But for right now, let's be future looking. Let's try to grasp what the future holds. And no, I'm not about to make any price predictions. Welcome to ReadySetCrypto. This is your brain on blockchain. So to kick things off, my first prediction or observation is related to the recent trend in the news that I've seen. I mean, have you noticed it? Ethereum Classic just lost a group of developers. Bitcoin Cash just split itself apart with greed. Oyster Pearl was blown up by its founder going off the rails. Cardano's chairman of the Foundation Council stepped down after 6,000 signatures demanded his resignation. And now the co-founder of EOS, Dan Larimer, wants to move away from the project. No, he's not leaving yet, but he certainly seems distracted. Larimer is notorious for moving on from projects to projects before his work reaches its complete vision. Many EOS investors were concerned that Larimer may be able to stick with EOS for the time needed for its network to reach full potential. I think those fears may be warranted after a message emerged with Dan proposing a new idea he's been thinking about. And look, I'm not trying to spread FUD. I think it's important for the community to keep an eye on the matter and confirm that these posts are even real. That said, for a $1 billion ICO, this team needs to be held accountable for developing what they promised. And this comes right after Larimer's previous project, Steemit, has announced that they'll lay off 70% of their staff. No, this isn't Larimer's fault, but it also doesn't surprise me as I've purposely stayed away from Steemit. I mean, don't get me wrong, the concept of a truly decentralized media consumption platform where content creators are paid fairly sounds great, but Steemit missed the mark on so many points. Once compensation is out in the open, it creates a money-first environment, which is actually toxic to a community. Then you'll have people who intentionally game the system with bots. That, in turn, devalues the currency that the platform was based on. Truly, Dan Larimer is a smart guy, but when it comes to architecting things, he leaves them half-baked. And look, I don't think it's entirely his fault for how he feels. Building companies is hard. Most entrepreneurs are going to face numerous obstacles as they build their company, regardless of the funding path they choose. Most startups fail, so we shouldn't be surprised when this happens in the crypto industry too. It's all well and good to get excited about a project as it's in its initial phases and fundraising capital, but that's a very different phase than actually building things. And when it comes to a lot of these ICOs, their capital runways are running out. Most companies raised capital in 2017 that would allow them to operate for maybe a year or two. But as we've seen, a lot of these companies are at the end of their runway as we push into 2019. Either they solicit more capital from beleaguered investors, find some way to be acquired, or they have to shut down. I think a lot of this stems from the fact that there's a dearth of usable technology with adoption today. And I think going into 2019, that trend is only going to continue to get worse. It's going to be a real test of the long-term vision and capabilities of these projects. So that segues really nicely into my next prediction. that projects that survived 2019 are likely here to stay. The most important years in a startup's life are the first 2 to 3, because this is when the majority of startups fail outright. Whether it be poor management, running out of funds, not being able to deliver on their promises, there's a myriad of reasons why a startup will fail. And look, I know that's not comfortable and it's not a fun topic to talk about, but it's something we need to address collectively, because CoinMarketCap is slowly turning from this green field of fun promises into a red graveyard of broken dreams. But the good news is that if projects are able to make it through this sort of gauntlet, that means they have some staying power. So I would encourage you to thoroughly investigate the projects that you are invested in, because the last thing I want for you is to have projects you're invested in go to zero. If you're not seeing constant updates from the team, if you're not seeing constant community involvement and discussion, if you don't see anything listed for that project on CoinMarketCal, those are all red flags, and I'd encourage you to employ risk management with your positions. So again, I know the last thing you want to hear is that after a year of suffering, we might still have more to come. We definitely will. But it has a purpose. The projects that survived 2019 are going to be here to stay. And I think that relates to a larger trend that is sort of my next prediction. So blockchain is an extremely powerful idea, but it's very far from being a mature technology. Certainly if people are expecting to become millionaires from ICOs, they're disincentivized to create the next generation of technology. Hopefully it's clear from my last 2 points that we've sort of bled out those kind of investors and are phasing out that kind of crypto. In essence, crypto is getting serious. I've absolutely noticed this trend in the past year as I've attended cryptocurrency conferences. The average attendee is getting more professional, there's more of a business focus, and the levels of discussion are very substantive and very holistic of the entire space and how it's moving forward. Not to mention, many of the big players in the blockchain space are getting noticed by major financial players who are definitely coming to terms with the possibilities that distributed ledger technology is opening up. On the market side of things, the most important statistical parameters of the Bitcoin market indicate very clearly that for many months now, it's met important criteria of financial maturity. Yeah, obviously that's called into question when November was the worst month since April of 2011 for Bitcoin, but I think we're trending towards transcending this volatile market, and the Forex market can look forward to some very real competition. Another way that the crypto space is maturing is in user adoption. In a very recent interview, Vitalik Buterin said that the most pressing issue for crypto in 2019 is getting user adoption. Getting people to use what we've been building. And look, I don't hold Vitalik up as some decentralized Jesus or something, but he is right. We need people to care about what crypto can do and push the envelope of how we can use it. As scaling solutions continue to improve, as we continue to develop the technology, as crypto really emerges as a defined and resolute new industry, I think user adoption will be on our minds more and more. And it's frustrating too, because I think we can see it. We're close. The promise of decentralized apps, decentralized autonomous organizations, millions of smart contracts firing off without any human intervention. The dream of a product going from manufacturing to a consumer's hands, all without a single human in the logistical process. It's tantalizing. But we've got a long way to go, and I don't think that's a bad thing. It's going to be fun watching us make progress and getting results. We're building this together. And I think one of the developments over the next year that's really going to help us make that happen is scaling solutions really coming online. I mean, the most interesting ongoing development in cryptocurrency today is the prototyping and release of layer 2 solutions such as Bitcoin's Lightning Network and Ethereum's Plasma. As we've known from the beginning, the biggest issue, the biggest hurdle facing blockchain is, while it's really good for security and the minuscule transaction fees that are inherent to the process is great, unfortunately, the biggest attracting element is how slow it is. It's become clear that cryptocurrency is lucky enough to attract sufficient investors and users inevitably succumb to the twin afflictions of increasing fees and limited throughput. I've often said that solving most existing blockchain scalability issues can and must take front and center in the year ahead if they're to stay in this race. And yeah, I think we're getting closer. The developments made on both Lightning and Plasma this year have been great. And in 2019, I think we're going to continue to see them make incredible progress. I think one of my favorite talks that I saw in person this year was Lightning Labs CEO Elizabeth Stark talking about the Lightning Network. It's clear that there's a lot of really smart people, really talented people working to make this happen. And I'm really excited to see what gets developed and what gets released over the next year. I think it's really going to help us push this space forward and achieve some of the milestones that we're collectively looking for. One of those milestones that I've often talked about that we sort of need is that killer app. I mean, that's how I feel the internet became more than just this global communication layer. I mean, look at the adoption curve of the internet. In 1999 in the US, you had about 55% of the population connected to the internet in some way. Over the next 10 or so years, that figure went from 55% to around 80 to 90. And yeah, the 30 or so percent is not a huge gain over the course of a decade, but think about what happened during those 10 years. Think about what was introduced on top of or working with the internet. It became incorporated with our lives. Smartphones, streaming, social media. These advancements and use cases help propel the internet into the realm of public consciousness. So there's definitely this desire for blockchain's killer app to help user adoption in the same way. But this is definitely a point that's argued many times over in the crypto community. To once again quote Vitalik, there will be no killer app for blockchain technology. The reason for this is simple. The doctrine of low-hanging fruit. If there existed some particular application for which blockchain technology is massively superior to anything else, then people will be loudly talking about it already. And so far, there's been no single application that anyone has come up with that has seriously stood out to dominate everything else on the horizon. So essentially, Vitalik repudiates the killer app framework. He believes that blockchain will become valuable for the many applications that it enables. But I strongly disagree. I think the killer app framework is the correct one. While there are many cutting-edge applications that technologists like myself will find interesting, the major drivers of blockchain's value are relatively narrow. Yes, the narrative in 2017 was trying to find the niche that will dominate all, but I think it's instructive to take a 1,000-foot view and remind ourselves of the big picture. And really, there are 4 killer apps for blockchains. You have the dark web and black market payments, with a market size in the billions, and this is where privacy coins and scaling can definitely help. Then you have digital gold, whose market size is in the trillions. There's tremendous potential here, but unfortunately volatility and consumer awareness stand in the way of that. But I think those are 2 things that are definitely solvable. Think forward 100 years and how people will look back and say, why was so much intrinsic value placed on shiny rocks? And it makes so much more sense to digitize value. The third killer app is payments, both macro and micro. Again, this is a market size of maybe the hundreds and billions. And this is definitely the use case I think most people look at related to crypto and blockchain. But of course, adoption, ease of use, and scaling is definitely standing in the way of that. Those will definitely subside over the next decade or so, but there's a lot of hurdles in our way. And finally, the one I'm most excited about is tokenization, where honestly, I have no idea what the potential market size is, but I know it's massive. Again, I think people in 100 years will look back and say, why was equity or assets tracked with paper? Doesn't make any sense. For a global economy to exist, you need the ability to transcend sovereign borders so investment can take place in a digital sense. Of course, regulation, legal frameworks, and consumer education are definitely standing in the way of this, but this is the area that really gets me jazzed up. And that said, I don't want to disregard other exciting areas in the space. For example, I've long been a fan of supply chain blockchain use cases. The space is full of innovation and is moving extremely fast. But if history is any indication, it's likely that the largest killer app for blockchains is going to be something no one yet expects or anticipates. But getting back to reality and moving on to the next prediction, I think we'll see meaningful advances in things like decentralized exchanges, shared liquidity across exchanges, really a cleaning up of the crypto market, will certainly make meaningful advances in the infrastructure of how we store and trade cryptos. I think security is another big issue that needs a lot of attention, and hopefully over the next year we'll see meaningful advances made there too. We'll also see crypto continue to be married with the Internet of Things, and that is another possibility that gets me very excited. But moving along and addressing maybe the point that's going to get me the most flack, is that I don't believe a Bitcoin ETF is coming in 2019, at least for the first half. Hate me for saying it, but I've hated the Bitcoin ETF from the start. It's the wrong vehicle at the wrong time, and if you actually read the proposal from VanEck and SolidX on their Bitcoin ETF application, it's hot garbage. I've made 2 videos on the ETF if you want to check them out. But here's my updated take. As I mentioned yesterday, SEC Chairman Jay Clayton is staunchly anti-Bitcoin ETF, and I think for good reason. He doesn't have it out for this space. He's looking out for all the people that got burned this year as ICOs died. And he's considering the future of what might happen if suddenly there was an ETF on a highly volatile asset suddenly tradable on the open market. So here's what we should consider. Volatility doesn't equal market manipulation. In fact, Clayton mentioned yesterday that the prices retail investors are seeing are the prices they should rely on, and free from manipulation. Not free from volatility, but free from manipulation. Additionally, the Swiss SIX exchange recently approved the first crypto ETP, or exchange-traded product, which consisted of a basket of cryptocurrencies. It's actually one of the most popular products on the exchange right now, and has even reached the top trading volume spot. That gives us an idea of what the ETF might look like, but the US is obviously a much bigger market, so we need to get it right. And finally, I think there's this really insidious notion that the ETF would be the catalyst of getting Bitcoin back to 20K and beyond. And honestly, what's that hypothesis based on? The Bitcoin futures? I've seen their closing dates correspond with market dumps throughout this bear market, including the most recent market drop. Have you considered how the market would react if the ETF was approved and we didn't go parabolic? Suddenly, we'd be right back into acting like the ship is sinking. And that's why it's so dangerous to place your implicit faith in charlatans that say X plus Y equals Z. Seriously, nothing is guaranteed. Even the very wise cannot see all ends. Clayton also talked about how there's still massive custody issues. That's absolutely going to change in the next year, but at present, that's certainly on the SEC's mind. So, to segue, that's sort of my next point. Institutional platforms, but not institutional money. Yet. Look, the other big narrative about how we get back to 2017 levels is Big Daddy Wall Street comes in and saves us from ourselves. And yeah, you probably know what I'm going to say, but that's naive, and I don't want you guys to be blindsided believing something like that. I understand that Bakkt and ErisX, Fidelity, and all these other big banks getting on and building platforms is exciting. How could it not be? Wall Street is legitimizing this space. But don't mistake that with investing. Wall Street are not retail investors. They play a very different game than you and I. Where we speculate and invest, trade and flip, they play the game of control. They look at a space and say, how can we control it? How can we adopt the models we're used to using to this new industry? I've made a couple videos about the dangers of Wall Street tools like rehypothecation and commingling. And that's honestly just a start. But the simpler frame is just to address the narrative we see often. No, Bakkt, and all these other platforms launching will not turn the crypto market around. I'm sorry if that's flying in the face of what many others have probably told you, but you need to hear it. However, in time, I do think they'll absolutely bring more liquidity and investment to the space. But please, do not hold on to this notion that the day Bakkt launches or Fidelity goes online, that we'll see Bitcoin shoot up thousands of dollars. Wall Street are not the guys lining up days in advance to buy the new iPhone. They're the ones holding the doors open and laughing as we fight amongst ourselves. All this said, it cannot be denied that institutional money is coming, and that's a game changer. I think 2019's #1 trend, in my opinion, is going to be intrinsically tied to that. In 2018, the frustration with ICOs began. as investors fell for scammers who collected money and then vanished to vacations and islands. The projects that conducted the initial placement of coins offered their investors to participate in the campaign to raise funds for their development of a startup in return for a cryptocurrency. However, these utility tokens are not investments in a project. Contrary to popular opinion, these utility tokens are not an investment in the project. You do not receive shares in the company or related shareholder rights. Because utility tokens do not have assets that would give them value, that's why we're having considerable difficulties with regulation. In particular, the SEC does not really recognize these utility tokens because as far as they're concerned, they are securities. So if 2017 was all about raising tons of money without fear of regulatory interference, the day of reckoning has come. The regulatory bodies are cracking down. And even if they're not, well, people just aren't taking the chance anymore. Therefore, security tokens and STOs look set to replace ICOs in 2019. All US offerings will be held in compliance with SEC rules under Reg D 506B or C, Reg A+, or Reg CF. This is the way that things should be done. The advent of the security tokens in 2019 will be a big game changer, and it will do to the traditional VC industry what email did to the post office. Next year will be the year of the security token. People are no longer willing to purchase assets that aren't tied to something with equity or a hard asset such as real estate. In summary, security tokens show a lot of promise and should absolutely assist the blockchain with self-regulation and mass adoption. Bridging the gap between finance and blockchain offers huge potential. The reduction of risk and associated scams will bring forward a new confidence that has relegated tons of people to the sidelines, most importantly institutions. And to that point, people who are afraid of institutions corrupting crypto, myself included, can see security tokens as being a whole new industry. Crypto can continue to do what it does, whereas security tokens are going to go in a completely different direction. So that's why I hold them in such high regard. It's why I keep talking about them and why I'm going to continue to do so. They are effectively the solution to the pain that we've been feeling for the last 12 months. No, maybe not directly in capital appreciation, but certainly in recognition and maturity. It's going to legitimize this space more so than just about anything else. So that's why they're my #1 prediction about what's going to affect crypto in 2019. So thanks for watching. I hope this video was helpful or informative, if not a bit rambly. But yeah, hopefully it's pretty apparent that I'm extremely excited for where we're going forward as a space. If you stuck it out through 2018, great job. And hopefully you can take some of the lessons that you've learned over the past year and put them towards becoming a more informed investor and trader. You know, that's what we aim to do at ReadySetCrypto, is help you do that. So thanks for watching this video. I'll catch you in the next one. Cheers.